For more on the economy and India, I spoke to Arvind Subramanian, senior fellow at the Peterson Institute in Washington, D.C., and I asked if the government there was choosing to do the right thing by defending the rupee over growth.
Well, I think they're doing the best that they can, given that they can't do some very important things. What's happened is that India is facing more than a foreign exchange problem. It's facing a much broader macroeconomic problem because, growth is slowing down very sharply. The latest number that came out today, 4.4%, compared to 11%, a couple of years ago. That's a sharp slowdown. Inflation is high, the fiscal deficit is high, and then we have this foreign exchange problem, and markets have suddenly turned bad on India, partly triggered by the taper in the US. So they're bolting for the exit. India needs foreign exchange, and the policy response has not been completely what it should be.
But there are two evils here. You mentioned the 4.4%. That's obviously a problem. The government's obviously looking at that, but they're still choosing to save the foreign exchange currency rather than the economy. Is that the right choice?
Well, at this stage, I think the right choice is to restore calm in financial markets. At this stage, you cannot say, let me go for growth, if that's going to turn this into a full-fledged crisis. So in the short term, they have to stop the panic, and that panic will require, taking action to reduce the deficit, reduce imports, stabilize the rupee to some extent, and show that, policymakers are up to the task of calming things down. That's number one priority.
What is wrong with the rupee? For our international audience, we look at exchanges and currencies. We talk about them going up and down. What's causing this semi-panic on the foreign exchange of the rupee?
Well, the immediate panic is the feeling that India may not have enough money to, finance its current account deficit because, a lot of obligations are falling due, and the question is whether, money will be there to pay these obligations. Now, remember, with markets, it's kind of a little bit self-fulfilling. India has about $280 billion in reserves, so that shouldn't be a problem. I think the problem is much more, does the whole economy hang together? Are policymakers up to the task of responding to all the challenges?
So the question is, are they up to the task?
I mean, at this stage, I think there are some important things that need to be done that are not being done, which is, to get, above all, to get the fiscal deficit in order. It's at 9%. Inflation is at 10%. It may go higher with the depreciation. I think that's where all the attack needs to be focused, and that's not happening as yet.
Two things I want to mention to you. One is the infrastructure projects. $30 billion worth of projects have been announced in the most recent term. Now, given what's happening, should India continue to push those infrastructure projects, or should they put that stuff on hold until things are more stable?
Well, it's one thing to approve these projects. It's quite another for them to get implemented. And I think the record has been in the last 1 or 2 years that, all these, despite all the best efforts of the government, there just isn't enough private sector confidence to push these projects through. So in a sense, it's a moot question. The question is not whether the government is going to approve these projects, but whether the private sector will move in to actually complete them.
The U.S. is beginning this tapering program, whether it's next month or the month after. How much of an impact does that have on a country like India?
Well, it has a substantial impact. India has a lot of fundamental problems, but the immediate trigger for all this, capital flowing out, to some extent has been the fact that the people think that the U.S. is going to reverse its monetary policy, and the fact that the U.S. economy has now become more solid. So the returns now in the U.S., whether you invest it in short-term paper or whether you invested in U.S. equities, that becomes more attractive relative to holding these risky rupee assets. And that is playing a role in how investors are behaving, and that's leading to some extent to the rupee declining.